Hello everybody, welcome to another update on the stock screener. Today we're talking about ArcelorMittal. So recently I got intrigued by steel because steel prices kept skyrocketing while iron ore is falling. So that was very weird to me. So I took a look at ArcelorMittal and I see that it also has a bottoming formation and starting to break out from top resistance. So this could actually go up much higher. So this is a chart that I saw. Steel continues to rise, is almost breaking out, and iron ore is going down. Normally, these two commodities should go hand in hand, as you can see here. But lately, something interesting is happening. Not sure why, but steel is going up and iron ore is going down. Very interesting. So how do we play this gap? This is an arbitrage gap. So you need to buy a steel producer, which is using iron ore, imported iron ore, because then you have lower costs because this is the raw material. Iron ore is used to produce steel. Steel is going up, but iron ore is down. So which company does this? ArcelorMittal. So let's first try to understand why steel is going up while iron ore is going down. And I think the answer is this one. China curbs steel output. So they're producing less steel, which means, of course, if you produce less of steel, then steel price will go up. That's economics 101. And we know that China is the largest steel producer. So if they start producing less of it, then this will have a lot of impact on the steel price. And that's what we are seeing now. It's starting to break out. Also, if you produce less steel, then you use less iron ore. So that means that iron ore goes down. If you use less of it, then there's too much of iron ore, and then iron ore starts to go down. So this is also what we are seeing now. So how do we play this? We just don't buy Chinese steel producers, but we buy things that are outside of China. And wonder above wonder, ArcelorMittal is outside of China. So this is just a visualization of China being the largest producer of steel. And what we are going to do is now let China uh, produce less, and then these people here will be benefiting from this, right? This is where ArcelorMittal is going to chime in. Now we know steel is very important. This is very important for energy infrastructure. You use it for wind turbines and electricity pylons. So steel is going to be very important in the future. So let's dive into the financials of ArcelorMittal. So it is at a market cap of 36 billion, has quite a lot of debt, but it's trading below book value. So you are having an easy 20% upside here because this is 20% below book value. So I'm very eager to buy some shares here. PE is only 2, very cheap. So if steel goes down, we still have a lot of cushion here because the PE is at 2. So I think this is a very easy, low risk buy with a lot of upside. cash is enough to pay off the liabilities. Earnings are at 16 billion per year, and you can see that here from the latest statements. Net income 4 billion US dollars. Okay, times 4 is 16 billion. And this is from June. This is from June, and the steel price in June was April, May, June. So it's somewhere here, and we are now higher than the second quarter. So yeah, so the earnings are actually higher now. Okay, so the PE is probably 2. And if steel prices stay at this level, you will have a very profitable company. So as we know, ArcelorMittal supplies nearly half of its iron ore by producing it, but the other half is of course imported. So if iron ore prices go down, then ArcelorMittal will have lower costs. Okay, so that will add to the earnings of ArcelorMittal, and they will be very good. You can see here that production is mostly America, 25%, and Europe, 48%. So Asia is only 14%, which means let those Chinese curb their steel output. ArcelorMittal will keep producing here in Europe and in America and Brazil. So no problems here with those Chinese. We keep producing at higher steel prices. And here you can see that all of these institutions have a buying advice, buy target, and the target is around 40 to 47 euros per share, because this is the Netherlands, ArcelorMittal on the Amsterdam Stock Exchange. So they started with 30, and then it went up to 40. Some are lower, 30 again, but we have 50, 40. So let's say it's about 45. Okay, 45. Let's take a look at our stock here. That's about here. So there's plenty of upsides left on this stock. They are all saying that ArcelorMittal will break out of this resistance, this higher resistance. And I think there's a possibility that this will be in the coming months. So we have multiple tops here, and then probably we will now go higher. So great saucer formation again, and then we will have a breakout. And there's nothing saying us that this is overvalued, because this is undervalued. We have a PE of 2, equity is below book value, and steel prices are going higher, and iron ore costs are going down. So I'm going to start dipping into this stock, and I'll see you in the next video. Bye.